All right, so settle in with that coffee and get ready because the financial world just threw us a curveball. President-elect Trump's pick for US Treasury Secretary is in, and, well, it's not who anyone expected.
Yeah, it's definitely a choice that's got everyone talking and the markets are already reacting.
And that's exactly why we're here today for this deep dive. We're going to unpack all the implications of this surprising nomination. We've got fresh financial reports and news analyses. This is one roller coaster you do not want to miss.
We'll break it all down for you and what it all means, not just what happened, but why it matters to you and what it might tell us about what's coming next.
So let's get right to it. The nominee is Scott Bessent, head of Key Square Group. Now, this isn't your typical Wall Street banker we see taking on this role.
Very true. Key Square Group is a macro hedge fund, and Bessent's expertise is in making these huge bets on global trends, currencies, interest rates, commodities, even whole economies. They're the folks who analyze how the world fits together and try to predict how events, like in one place, could trigger chain reactions somewhere else.
So he's not just focused on what's happening within the US then. Bessent's looking at the whole world, thinking several steps ahead. But how are the markets reacting to this very unconventional pick?
Well, the initial response is mixed, but there are definitely some signs of cautious optimism, I'd say. For example, the dollar index actually fell after the announcement, meaning other currencies gained strength against the dollar.
Now, to someone who's not, super deep into finance, that might sound like a bad thing. Could you explain why that might actually be a sign of confidence in Bessent?
Sure, a weaker dollar can make U.S. exports more competitive globally. And if Bessent is seen as someone who can stabilize global markets, well, investors might be shifting their money into other currencies, expecting them to do well under his leadership. It's a sign that, at least for now, the world is betting on Bessent to bring stability.
That makes sense. And it's not just the dollar index that's reacting positively. U.S. Treasury bonds also climbed in value. U.S. stock futures are up. And even the VIX, that's the market's fear gauge, right? It dipped, meaning less anxiety from investors.
Exactly. The VIX measures market volatility. And the fact that it's down suggests that investors are feeling less uncertain about the future, maybe feeling that Bessent might moderate some of the more protectionist trade policies that Trump campaigned on. Remember, those policies were a major source of market anxiety before the election.
Yes, some analysts are definitely breathing a sigh of relief. One of our sources has an economist saying Bessent's nomination builds on the emerging narrative that the tail risks of a radical Trump policy departure have been overstated. Seems like some are reassured that maybe things won't be as drastically different as they feared.
That's a key point. Many investors were worried about potential trade wars and the negative impact that would have on global growth. Bessent's background and what he said about trade in the past suggest he might favor a more measured approach, which could be calming those fears.
But it wasn't all sunshine and roses, though, was it? Some markets didn't exactly celebrate.
True, the reaction wasn't all positive. Chinese stock markets, in particular, took a hit. The CSI 300 index, a key indicator of the Chinese market, fell by a pretty substantial 3.1%.
That's a big dip. Is that directly tied to Bessent's nomination, or are there other things going on?
It's probably a mix of things. Uncertainty around future U.S.-China trade relations is definitely a factor, especially given the tensions that already exist. But we also have to consider the global market context. There are other economic headwinds out there, and China isn't immune to those.
So we've got a mix of reactions, some positive, some negative. But to really understand what might happen next, we need to dig deeper into Bessent's views on trade and economic policy.
Exactly. What are his stances on the big issues, and how might they translate into action? That's what we'll unpack in the next part of our deep dive. So we've talked about how Scott Bessent knows global trends, but what do we actually know about his views? And how might those views play out now that he's in this new role?
Well, one thing that really stands out from our research is his being pretty vocal about advocating for caution when it comes to trade restrictions.
Right, and that's especially interesting when you think about some of the more protectionist talk we've heard from, some in the Trump administration.
So there could be some real friction there, a push and pull between Bessent and others.
It's certainly possible, yeah. We might see some interesting dynamics play out internally. On the one hand, you've got Trump, who's known for bold moves, kind of unpredictable. And then on the other, you have Bessent, who seems to favor a more, I don't know, measured and analytical approach.
Like one of those buddy cop movies, you've got the loose cannon and the by-the-book guy. Except in this case, the stakes are a lot higher than just catching some criminals for him.
Uh-huh. Yeah, that's a great analogy. The stakes are definitely high, especially when you consider what the economic landscape looks like right now. There are a lot of potential problems out there.
Right. Our sources are pointing to some pretty worrying economic indicators like the Purchasing Managers Index, the PMI. It's showing some mixed signals.
Yeah, for those not familiar with the PMI, it's basically a survey of businesses across different sectors. And it gives us a snapshot of whether the economy is growing or shrinking. A PMI over 50 means growth, under 50 means contraction.
And what's the PMI saying right now?
Well, the US PMI is above 50, so business activity is still expanding here. However, both the UK and Eurozone are showing PMIs below 50, so their economies are contracting.
That's a pretty big difference. And I was reading that leaders from the European Central Bank are expressing concern about a potential economic decline in Europe, especially with all the uncertainty around U.S. trade policy.
Yeah, they're worried about the US enacting protectionist measures that could hurt European exports, and that could trigger a deeper recession. And a recession in Europe could have ripple effects everywhere, including back here in the US.
Okay, so we've got these mixed economic signals globally. We've got potential conflicts brewing within the U.S. administration. And then to add to it all, Bessent's stepping into this role just a year before a presidential election. Talk about pressure.
It's a high-pressure situation for sure. And let's not forget the elephant in the room, the US-China relationship. Arguably the most important economic partnership in the world, and also the one with the most tension.
Right. We already saw those Chinese stock markets drop after Bessent's nomination was announced. That definitely shows some anxiety about how this will impact trade between these two economic giants.
But it's interesting that Bessent has been very clear about favoring a cautious approach to trade restrictions. That could mean he's willing to find some common ground with China and avoid a full-on trade war.
But wouldn't that put him at odds with those in the Trump administration who want more protectionist policies?
Yeah, he's walking a tightrope for sure. He'll have to balance his own views with the political realities and the bigger geopolitical landscape. It's a complicated situation with no easy answers.
So how might someone with Bessent's background approach all these economic and geopolitical challenges? Are there any tools or strategies he might bring to the table that are different from what we usually see?
That's the million-dollar question. And that's what makes this whole situation so fascinating. Because macro hedge fund managers like Bessent, they live in a world of complexity and volatility. They're used to analyzing these interconnected systems, anticipating risks, and making big bets in uncertain environments. They don't shy away from risk, they embrace it and try to use it to their advantage.
So he might be more willing to try some unconventional things that others might think are too risky.
It's definitely possible, but it's important to remember that governing isn't just about economic models. It's also about politics, diplomacy, and building consensus.
And since we're talking politics, we can't forget about the potential impact on the election next year, how Bessent handles the economy, any successes or failures attributed to him. That could have a big effect on Trump's chances of being reelected.
Definitely. If the economy's doing great, Trump can take credit and maybe win again. But if there's a downturn, if things start to go wrong, voters might blame him whether it's really his fault or not.
So Bessent's success as Treasury Secretary could determine the election?
Absolutely. And a change in administration would bring a whole new set of economic uncertainties.
Yeah.
It's like we're all in an economic roller coaster and we don't know what's coming next.
It's a lot to take in, even if you follow this stuff all the time. So before we dive into what might happen, let's recap what we've covered so far.
Good idea. Let's summarize. The most important thing is that we've got someone different in this role. A macro hedge fund manager leading the US Treasury. That's a big change, and it could mean a whole new approach to economic policy, both in the US and globally.
And all this is happening when the world is already really uncertain. We're seeing those mixed economic signals, rising trade tensions, and different opinions within the U.S. government about how to handle the economy.
Exactly. Plus, there's the pressure of the presidential election next year. It's a complex and potentially volatile situation, and the decisions made in the next few months could have a huge impact on everyone.
Okay, so we've talked about the challenges and what's unclear about this appointment. Now, what if we put on our, future predicting hats for a second and think about some scenarios how this might all go?
Always fun to speculate a bit.
Yeah.
But let's remember, we don't have a crystal ball. Especially with something as complicated as the global economy, the future is never certain.
True, true. But it can be helpful to think about the different possibilities, right? To understand, what could happen and maybe spot some early warning signs.
Absolutely so. Let's imagine a scenario where things actually go pretty well. Bessent manages to navigate those potential conflicts within the Trump administration. Maybe he tempers some of the protectionist ideas and moves the U.S. toward a more balanced trade policy.
So a smooth sailing scenario, what would that look like?
Well, we might see global markets calming down. Less fear of trade wars could boost investor confidence, encourage them to put their money back into the global economy.
Mm,
And that could help us avoid a recession, maybe even see some growth.
that sounds good for everyone, but what about China? They haven't exactly been happy about Bessent leading the Treasury.
That's true. But if the U.S. takes a more predictable, less aggressive stance on trade, it might ease some of the worries in Beijing. China might see it as a chance to cooperate and stabilize their own economy.
So instead of a trade war, maybe more of a trade negotiation, a trade tango.
Now, let's not get too metaphorical. But yeah, a more balanced approach from the U.S. could mean constructive dialogue and agreements that benefit everyone.
Okay, so that's smooth sailing, but let's be real. Things don't always go as planned. What if those conflicts within the administration, blow up? What if Bessent can't stop some of those more aggressive economic policies?
That's our stormy seas scenario,
Yeah.
and it's definitely possible. In this case, all that initial nervousness in the markets we saw, that could turn into, full-blown panic.
And a panicky market is never good.
No, definitely not. We could see the dollar weaken even more, making imports more expensive here. Global trade could be disrupted, leading to shortages and price increases. And the risk of a recession, both in the U.S. and globally, would go way up.
And I imagine China wouldn't just stand by and watch.
Right, they might retaliate with their own protectionist measures, targeting U.S. goods and companies. And that would escalate into a tit-for-tat trade war, which would be bad for everyone.
Okay, so stormy seas is not a pretty picture. But let's not forget one more thing. This is all happening with a presidential election right around the corner.
Yeah, that political aspect is crucial. If the economy is doing well, if things are calm, Trump can take credit and maybe win again. But if there's a recession, if prices are skyrocketing, voters might blame him, even if it's not really his fault.
So how Bessent does as Treasury Secretary could decide the election.
Absolutely. And a new administration would bring its own economic uncertainties. It's like we're all on this roller coaster and we have no idea what's coming next.
Definitely a lot to think about. So for our listeners, what are some key takeaways from all of this?
I think the biggest takeaway is that we're in uncharted waters here. We've got a macro hedge fund manager leading the U.S. Treasury. At a time when the world is really uncertain, that's a recipe for potential volatility, both in the markets and in politics.
So buckle up.
Exactly. And stay informed. Don't just read the headlines or listen to sound bites. Dig deeper. Look at different sources. Try to understand what's really happening. Because the more you understand, the better prepared you'll be for whatever happens.
Great advice. So as we wrap up this deep dive, any final thoughts?
For me, it's all about watching the data. Things like the PMI, inflation rates, and consumer confidence. Those will tell us how the U.S. economy is reacting to Bessent's policies. But it's just as important to watch how China reacts and how stable the global markets are. Those are the signs that will tell us if we're heading for smooth sailing or stormy seas.
Great point. And for everyone listening, remember, this is just the start of the story. Keep learning, keep exploring, and keep those questions coming. We'll be back next time with another deep dive. Until then, stay curious. It's